Hi, Danny Lynn here. I'm co-owner of Home Options Made Easy and author of Home Buying Success Formula. I wanted to continue our video series and talk to you today about the differences between a traditional home transaction and buying a home using owner financing strategies. So again, we're going to go back to our little whiteboard here, and we're going to talk about buying a home using traditional financing. The first thing that you're going to do is get some type of pre-qualification letter or pre-approval from a lender. That could be a bank or a mortgage broker. And then when you enter into a contract and find a home, you're going to have some type of option period. Now, it depends on the state that you're in exactly how that works. But your option period is going to allow you to do a home inspection and do any other due diligence on the property or the area, neighborhood that you're in itself. And then you have your title insurance and title commitment that you're going to want to review, your survey, HOA, and appraisal. Now, some of you may know how to review all of these things, home inspections, you know how to do your due diligence, you know how to read title commitments, surveys, HOAs, appraisals, but I would say 90% of buyers don't know how to do this. And all of this by itself, not exactly something that you should probably go into without having an expert on your side guiding you, showing you how to read these things, showing you what you should be looking out for, what's not right, what is right, what's good, what's bad, and how to protect yourself. Now, let's go ahead and go into the owner finance transaction, because not only do you still have all of this, but you have all of this extra stuff too. And this is why I wanted to make this video. I would never advise anybody to buy a home without having an expert at their side to explain everything and to show them what everything means. I would never, ever go into an owner finance home transaction without having an expert by my side. If I wouldn't do this, I certainly wouldn't do this. So let's go ahead and go into what is a part of an owner finance transaction that's not a part of a traditional home transaction. So first is the type of transaction. Again, I hope you watched the earlier videos. If you did, you know that there are rent-to-owns, there's lease purchase, there's equity holding trust, there's wraparound mortgage, there's mortgage assignments. So you want to understand what type of transaction you're getting into that home, and what does that transaction mean, what are the risks, and what are the benefits to you as a buyer. Next, 25 points of negotiation and or review. I think that this is huge, and I don't know if there's a report out there anymore. I initially had done a free report for everybody, and one of the things I did in there is I wanted people to understand what they didn't know about owner financing. So I went ahead and I listed the first 5 things that came to my head when I thought of what do I get to negotiate in an owner finance transaction. And then I put 20 more blank lines underneath it. And I asked people, go ahead and fill out what you think all the points of negotiation and a review are going to be when you buy a home using owner financing. And of the people that I know that tried it, nobody could fill it out. Even other agents and other investors couldn't fill it out. Of course, if I gave you a few days and you could, research the internet, you'd probably have to spend a whole lot of time researching the internet to get all of those things listed out. But eventually you could. But do you have that time, or do you have a full-time job, kids, family, and all this other stuff? And that's, again, why I think it's so important, because a lot of people do think they can go into these transactions on their own, but they have no idea what they're getting into and the possible risks they're putting themselves and their family at by doing it by themselves. So 25 points of negotiation and a review are in owner finance transactions, and each one is very important for completely different reasons. That's one of the things, by the way, this video is not meant to push my book at all, but one of the things I felt was very important in the book was to have a checklist of those 25 things. So even if you didn't read the book at all, the one thing that you could have was this checklist, so that when you got in, put a contract in on a house, that you would have this checklist and you could start marking off all of the points so that you knew that they were addressed, you knew exactly what it meant for you, and you could just check them off as you go. Because we all know, buying your home is the American dream. We all want to own our own home, but it's an emotional decision for the most part. And you walk into this situation, you love this house, you want to hurry up, and you want to sign it and make sure nobody else has a chance to make an offer on it, and then all of a sudden, then what? And you don't know what to do, and okay, my option period, should I get a home inspection, should I not? And that's what I see buyers do all the time, and every buyer thinks they can go into it themselves. They find the home of their dreams, all of a sudden they're all by themselves, and they're signing a contract without doing all of this. And that's what, your agent or your, I don't know how much investors really want to be a part of this situation, but whoever's on your side to help you through this transaction, which I recommend always, my first choice is always a real estate agent or realtor who has a fiduciary responsibility to protect you, and they have to hold themselves to high ethical standards. And that's why I personally, am a realtor, because I believe in that. But I'm an investor too, so, and I know lots of investors that, have a lot of education. If they're helping you, you want to know which questions to ask and make sure that you ask them the right questions so that you're educated. So again, it's very emotional, so you need to have this little checklist so that you are addressing all of these points. Or have an agent or a realtor that has their own checklist so that they are addressing all these points. And make sure you ask them, 25 points, do you have them all? Some agents just don't know how to do owner finance transactions, and that's why I always say find an expert, find an expert, find an expert. Every realtor is not an expert at owner financing, so make sure that you understand that as well. Homeowners insurance. In an owner finance transaction, homeowners insurance could sometimes make or break you. It can cause a lot of problems if it's not done correctly for both you, the seller, and then the lender is going to get involved, and that's never good. Next, third-party servicing companies. I advise all the time to get third-party servicing companies. This is somebody who's going to be your third party, if you will. If I'm the buyer and you're the seller, then I need to make payments to the bank. Instead of making payments directly to the bank and having you worried about whether I'm making them or not because you're the seller, I'm going to make them to this third party. And this third party is going to then make all the payments to everybody else. So they might be holding an escrow account that holds your taxes and insurance. They'll be making the payments to the bank every month, maybe to the HOA every month. But they're responsible for all that stuff, and they're in communication with both you, the seller, and both me, the buyer, if that was the situation. So that puts the seller at ease because the seller knows that the payments are being made, puts the buyer at ease because I don't necessarily want to give my payments to the seller, right, which in this case is you, because I don't know if you're going to pay it, and I don't want to be foreclosed on if I'm actually paying you and you're not paying the bank. So third-party servicing companies are fantastic. The other things that they can do is they can report to the credit bureaus on behalf of the buyer. So that's huge, and not all of them can do it. It's a point that you'll want to ask when you hire a third-party servicing company to help you. Puts everybody at ease, gives everybody peace of mind. I highly recommend them. How to find these homes. This is very interesting because so many buyers think that you can find these homes all by yourself. Let me tell you, I do this all the time, full time. I'm an expert at it. And I know what I'm doing, and I don't even know all the homes. Why? Because there's different investors that aren't a part of big organizations, and they're out marketing their home on their own. So I've got assistants and people that work for me that go out and find all these homes. And on our website, we create the largest online, inventory of owner finance homes. So we go to the MLS inventory, which is key. Finding a realtor that has MLS inventory of owner finance homes. If you're working with an investor, you don't have those, and there's a lot. So you need to go and find a realtor that has access to that. There's also newly coming up an investor type of MLS. Only certain people have access to that investor MLS, so you need to find somebody who has access to that. Also, then you've got those individual investors out there, so you need to have somebody who's active enough to be out in the community and finding those homes so that you can go to one person, get the entire gamut of owner finance homes at your fingertips, and then be able to choose and look at them whenever you want. I think that's very important because owner finance homes are very scarce, and you want to be able to, it's not like the candy store MLS, right, where you've got everything to look at. It's a little bit more rare to find an owner finance home, so you want to at least be able to have as many options as possible. So how to find these homes, make sure you hook up with somebody that knows what they're doing and is doing this all the time, has access to the realtor MLS, what I'm going to call the investor MLS, and then can go out and actually do their diligence on other homes. How to protect yourself. This really has to do with everything that we're talking about here, so let's briefly go over some of this. Excuse me. Lending, again, that goes here. If you're lending through an owner finance transaction, the seller is acting as your bank, so you need to know all these 25 points of negotiation and or review in order to protect yourself. Home inspection. So many people don't think they need a home inspection, but let me tell you how many times I've had buyers tell me a story about them buying a home, they didn't know home inspection, something happened and cost them $10,000, $15,000 down the road. Because they didn't have any idea, because they didn't get a home inspection. Anybody can walk into a house and say, that looks good, looks good, looks good, but what about the roof? How old is it? What about the air conditioning unit? Everything that's inside a house that you can't see, are they on the verge of breaking? Are they 10 years old and they only have a shelf life of 12 years, so you're going to have to replace them in 2 years? This could help you in negotiations, actually, finding out all that information and seeing if there's any way that you can have the seller work with you a little bit, because you might have a large expense coming up in a very short period of time. Doing your due diligence is very important on the neighborhood, the area, and the home. This should be done during your option period when you're doing the home inspection. If you have a realtor that you're working with, which I always recommend, have them do it for you. Make sure that you know the schools. Are they rezoning? Is there any widening of roads, or is there shopping centers being built pretty soon? Things that might affect your decision as to whether you would want to buy that home or not. Very important to do. Most people don't do it. Title insurance and title commitments. This is especially important to review in an owner finance transaction. Back in the 80s, there used to be this very common con of sellers selling a home to a buyer who needed owner financing. They would collect the down payment, and then the buyer would actually pay the mortgage payment directly to the seller. The seller was supposed to be paying the bank. A couple things happened here. Number one, the seller didn't even own the house. They weren't on the deed. The buyer didn't know that they were on the deed because they didn't do a title run and get title insurance, and they didn't know how to read a title commitment, even if they did, but somebody else would have caught it had this been run in the first place. So the seller had no right to sell the house in the first place. And beyond that, because this was a con, the seller collected the down payment, collected the mortgage payments, and took off. And now the buyer has spent all that money. They don't even own the home. They have no rights whatsoever. Also, what if the seller is on the deed, but his ex-wife's on the deed too, and he never told you about it? Well, she hasn't given her permission to sell the house. So there's some weird things that can happen here, and that you can find out via title commitment. Now, unless you're doing a kitchen table closing, most of this would get caught for you. But, again, buyers don't know what to look out for. So that's just a few of the things. Sorry, tax liens, HOA liens, vendors liens. There's other liens that could be on the house that you're going to essentially assume once you buy the house. And if you didn't know about them, then all of a sudden, whoa, there's a $25,000 vendors lien for that pool they started in the backyard. So make sure you run a title commitment, you know how to read a title commitment, or you're working with somebody who knows how to read a title commitment. Survey. This is going to come into property lines, easements. You want to make sure that the fence is on the right property line. If it's not and it's on the neighbors, you want to address it quickly, because in most states there's a certain amount of time where that land automatically becomes a neighbor's if nobody contests it. Also easements, if you're planning on building something in the backyard, or expanding your house and building out. If there's easements that you're not allowed to go across, you're going to want to know, because that's going to inhibit you from actually building. HOA, you're going to want to know, again, what the restrictions are of the neighborhood, what permission you need from HOAs in order to build things. And appraisal, of course, you want to make sure that the home appraises. Now, for this, in a traditional transaction, the lender's not going to lend any money if the home doesn't appraise, right? In this transaction, well, you're dealing with the bank as the seller, so the appraisal really doesn't matter. Where the appraisal comes into play in an owner finance transaction is a few years down the road when you go to refinance. Now, what happens if the market is kind of stale and it sits like this for the next 3 to 5 years? Well, it depends on where you bought the house at. Usually owner finance homes are sold for top dollar, which is okay, selling something for top of the market, because they're giving you something nobody else is giving you. So it's okay to pay full market value for a home. Sometimes there's a small premium for it because it's an owner finance transaction. Well, in a couple of years, when you go to refinance, what if the house doesn't appraise? Do they get to foreclose on you? What did you put in the contract to protect yourself? So that's very, very important right over here when it comes to owner financing, because you can protect yourself, but you need to know what to do. Loan and refinance terms, that's exactly what we just talked about in reference to the appraisal, and that's why I wanted to talk about that here. And the risks involved, the risks, are all of these. These are all risks. If you don't know what you're doing, you don't know how to read, or you don't know how to address these things, or you forget to address these things. So the risks involved are all these. Also, the due on sale clause is going to be something that you want to address with your agent, the investor, or your seller, somebody. Again, I always recommend working with a realtor because they're responsible. Working with a realtor who understands and is an expert in owner finance transactions. Let me just, verify that. Not all realtors know what they're doing. So the risk, talk about the due on sale clause. It might not even apply to you, depending again on the type of transaction that you did. But if it does apply to you, you need to know what it is and what your risks are when it comes to the due on sale clause. So that's it. I was trying to make this a short video. I probably talked really fast and made it a little bit longer than I should have, but anyways, just meant to give you an overall review of the differences and what you should be looking out for. And I hope that you enjoyed it. I hope it was helpful. Feel free to leave comments here on this. I think you're probably on the YouTube channel if you're watching it now, but feel free to watch the other videos and visit me at ownerfinancehomestore.com. or Home Options Easy. I actually think that the website's a little bit different, so we'll have that listed for you somewhere in the description or here in the video. Okay, thanks so much. Have a great day. Bye.